I'm looking at the market, and as a managing director of a hedge fund, I'm looking at who's investing right now. And I can tell you right now, it is not retail.
Hello there, I'm Ben.
I'm Anastasia.
And you, good person, are watching NeverMind the Rumour Mill.
On Friday, the 29th of April.
Coming up today, it's a great show today. We've got some kind of market watching, some market analysis and insights from someone who actually knows what they're talking about. Hallelujah. We've got Bitcoin-backed Wall Street loans, Robin Hood, Amazon, OpenSea, and all the hot tips and kind of market news you could want going into the weekend.
I've got a joke for you today, Ben.
Oh, okay.
Why did the wrecked pleb cross the road?
I don't know, Anastasia. Why did the wrecked pleb cross the road? It's not easy to say that, is it?
Ask us for financial advice.
I see what you did there, and that's why they got wrecked, because they asked us for financial advice. Eh? What kind of fool would do that? Eh? Without doing their own research. Ugh.
You wouldn't do that, would you?
Nice.
That was scary.
Yeah, that was good. That caught me by surprise, to be honest. I did jump. Nice. So I've got a confession for you all out there, dear viewers, listener type people. We've been having a lot of fun between us, haven't we? We've been having a good time looking at the charts together these past couple of weeks. But if we're going to be honest with each other, we haven't really learned a heck of a lot, have we? You know, we've meandered, we've looked at prices, but we've not really learned a huge amount. So what I thought I'd do for us, for you, for me, for everyone, help me, help you, help yourself, is I've asked my very good friend and NeverMind the Shitcoins regular, Mr. Edmund McCormack, if he could step in and just basically add a touch of the proceedings here. So hello, buddy, how are you?
Good. Don't undersell yourself. You've done a great job of looking at the market. I mean,
I look very well, like a guy fixing a car, basically. I go,
Exactly.
And then I call someone who knows what they're doing.
And we were talking before about movies and film, and you were telling me favorite actor is Kevin Spacey, and really honor him as an actor, as a person, and thinking of that, really looking at this market, either you're going to be sort of a doormat or a matador. And I said, why don't we get on the phone? Why don't we get on Zoom and talk about sort of how investors can sort of navigate these waters? But your inspiration, with Kevin Spacey and really talking about how investors right now are sweating like the stock exchange is a curves. It inspired me to come on the show.
Yeah, well, I mean, it's an honor to have you here, buddy. Of course, so and I mean, I'll never forget that party me and Kev had together. I tell you, good days. Hey, bless him. Yeah, still waiting on House of Cards next series as well. But yeah,
sure. And you got to do the double tap like you're a psychopath. But in the last day, a lot has happened. A lot of people sort of looking at tech as sort of a canary in the coal mine to understand where crypto is going to go for the next 3 months. We saw back in January overall speculative assets, particular tech, and looking at the NASDAQ 100, they got absolutely crushed. It was one of the worst starts to the years in probably 5 years. And towards the end of the month, tech started to save the day because Microsoft came out with a big earnings report. Same thing with Alphabet. Meta, of course, had a terrible quarter, but Apple came in strong, Intel, et cetera. And crypto sort of flew on these tailwinds, looking at really how correlated or how tied at the hip crypto is to big tech. And a lot of eyes were on those companies again this past week, as many of them were pushing out their earnings. So
I suppose there's obviously a lot of aligned interest there, isn't there, between these, kind of the various spaces.
Yeah, and there's also a lot of interest because when tying into sort of what's going on from a macro standpoint, especially with interest rates, and we have a really big sort of event happening next week, which is here in the U.S., the Federal Reserve will announce their plans to raise interest rates again.
Yeah.
And, looking at, investors, because right now there's a lot of skittish investors out there. They're looking at, okay, we could stomach a rise in interest rates, and historically they haven't. Tech generally doesn't do well with high interest rates, but they're willing to pardon it if growth forecasts are strong. And unfortunately, we just saw, here in the U.S. last evening when Amazon and Apple released their earnings.
Coming up
wasn't
on that
great.
later.
Yeah, it wasn't that great. I know you're going to be talking about Amazon later, but even Apple, who crushed earnings, because they talked about roughly a $3 to $8 billion sort of haircut on what they project for earnings, or revenue, I should say, this quarter because of supply line constraints. They took a beating, and you're seeing that, even sort of compounded today, when the new inflation number came out. It's called Private Consumer Expenditure Index. It just means everyone's used to the CPI, Consumer Price Index.
Yeah,
this looks actually at all of the U.S., not just urban cities, and looks at GDP as sort of the way of calculating what the impact is. We came in slightly under February from March, but it's still extremely high.
Yeah.
And I think it's cemented. We're going to see, a nice little 50 basis point hike in February, probably again in June. But it'll be interesting. There's a good report that came out today, a survey Bloomberg did with all these economists. And I think it was just a hair under 30 economists. And the general consensus is that the Fed's going to ease off after June. And that could be a huge boon. They're going to, after they raise interest rates by 75 to 100 basis points, which is 0.075 to 0.1. They think that the Federal Reserve will start to sort of ease up on jacking up interest rates, which that could be a huge boon for crypto, because generally this is an asset class that does very well when there's liquidity.
And it definitely sounds like things over your side of the pond are more optimistic than ours. I mean, over here, our finance minister is planning to start minting NFTs in the summer. So, the divide there.
Well, at least you guys haven't caved in and started paying for oil in euros to then convert to rubles. But in terms of, sort of looking at, this market, you need a crystal ball. I mean, there's so many different variables happening. And even before we started recording, I started mentioning when it comes to charting, I mean, right now you could throw that out. Truly, you could throw it out. Because for one, I think that just charting, I think charting is just basically astronomy for men.
Yeah. I'll be honest, fuck for that.
Value in it. I don't put much value in it anyway. And at traditional finance, by the way, most charting is done by entry-level analysts, just to put perspective of the prioritization of where that sits.
Yeah.
But with everything going on right now, I mean, you could just throw the rule book out the window at this point. There's so many variables that will supersede trends that we're seeing, and ultimately liquidity that's coming in. I mean, right now, I'm looking at the market, and as a managing director of a hedge fund, I'm looking at who's investing right now. And I can tell you right now, it is not retail. It is not your average person coming in, buying shit.
Institutional investment is coming.
The thing is that if you haven't gone broke already at this point from all the different market corrections, inflation's going to eat eat whatever's left over. And right now, this is a market for sophisticated investors with access to very sophisticated data sets and systems. So I would just say, err on side of caution. Sort of like, in the equity world, you kind of know that you're up against high frequency traders and sort of concede.
Yeah,
I would take a very
limits.
similar mindset here. I would take a very similar mindset here.
Excellent. Well, thank you ever so much, buddy. I cannot tell you what a step up in class and quality that was over my shambly ramblings the previous evenings. You heard it here first. Thank you very much. And hopefully we'll be seeing a lot more of Ed going forward in this segment. Thank you very much, sir.
See you later.
Well, that was refreshingly useful, wasn't it, eh? And so speaking of useful, what's been going on since last time we spoke?
Well, Coinbase has introduced a new line of Coinbase Intelligence, which includes a tool for tracking and identifying transactions, KYT it's called, as well as updates to the Coinbase Analytics products. Seems Solana's biggest ever NFT P2P sale went recently, with OK Beers raising 18.5 million and floor prices rising steeply.
That's a lot of honey.
Interesting.
I stopped on your punchline then. Yeah, your punchline was better than mine. Sorry, continue.
Moving to South Korea, police have nabbed the not so masterminds behind NFT rock pool switch and bait Catsy, who half-inched over 100. Half-inched, yeah.
Half-inched. You try and cockney rhyming slang there. How much did they half-inch, eh?
Over $160,000.
Wow. Okay. Yeah. Send them away.
From bears to cats to monkeying around, ApeCoin has been suspended from trading on Binance after a sudden spike in demand, maybe related to their metaverse late sale.
Ooh, okay. Something about gorillas and bananas.
And final quickie. They said it would never have smart contracts. They say it would never have NFTs. And now, well, it has both of this.
Sort of. Sorry, fans.
They now have their own metaverse coming. How it's called? Cardalonia.
Yeah, card. I think I've typed that badly. Cardalonia. We have a cough syrup over here in the UK called Corvonia. Here's a question for you. Have you got Bitcoin and need cash, but you don't want to sell your Bitcoin? Because, woo.
Well, you can now take out a BTC-backed loan with Goldman Sachs.
No, get out of town.
Indeed. A spokesperson for Sachs said the 24-hour risk management and structure of the first of these collateralized loans was interesting.
Okay. Well, I think I may need to phone Ed to understand why they're interesting. But speaking of interesting, who fancies going to Panama?
Me.
Oh,
please.
Sorry, it's not an invite or anything like that. Sorry, it's just the next story.
Okay, whatever. Read your silly story then.
All right. Well, Panama, which is famous for beautiful beaches, it's famous for beautiful beaches, fresh fruits, and a 17.5% murder crime rate, is making moves to legalize 9 major cryptocurrencies as tender as currency in the country, which is huge, really.
Yeah, it's huge.
Yeah, and another very cool, that's a cool story. I think I had to include this. This isn't really crypto, but is it a meme coin? Is it a plane crashing? Nope, it's Amazon. What happened? I mean, it's kind of briefly teed us up. Essentially, I think their Q1 report did not go down too well.
Despite being the only viable option for most folk during lockdown, it seems they made no money.
Wow. Yeah, that's impressive, isn't it? Quite impressive. We could speculate with thoughtful insights into how or why this has happened, or we could just say,
Ha ha.
Worth a try. And just to quickly tag in, Robinhood, the popular crypto exchange and normal stock exchanges, seems to be having much in the same issues as well. Oh, fine. Leave me hanging. Whatever. Right, that's all from us for today, folks.
Wait. I think you forgot something.
What's that?
Not you, the viewer.
Oh, the viewer forgot something.
You forgot to hit subscribe and like the video.
Oh, you silly viewer. Don't do that.
Don't forget, guys, this show is all about infotainment value and not a financial advice. 100%.
That's infotainment. Bye. Thank you very much. See you on Monday,
Bye. Thank you very
everyone.
much.
Stay safe. Don't
See
get
ya.
wrecked over the weekend. Bye.